Hi friends, Simit here from InformedTrades.com. Today is Friday, May 9th, 2014. Time for our daily forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions I put on the markets, all to help traders learn. You can sort of learn by watching me trade, learn from my mistakes, learn from my successes. We can all learn together. Of course, if any of the information I'm presenting to you is unfamiliar to you, check out InformedTrades. They have a large archive of learning material, not only price action swing trading in the forex market, which is what I focus on, but many other styles of trading, other time frames, other markets. Check it out. Share your knowledge or ask questions. Practice trading. Keep a journal. All that and more on InformedTrades.com. Check it out. Join our community. Okay. Let's take a look at the charts. As is customary, right now is the dollar Singapore chart. I was thinking about trading this. We're at support on dollar Singapore, and this is something I hesitated on. Generally, when I hesitate, I just skip it. It's not worth the stress. The best trades are effortless, in my opinion, or the signals are so clear. With here, we have some signs of higher lows, or excuse me, lower highs. Lower highs, so you see this downward sloping trend line. We also have an upward sloping trend line. We're below the 50 simple moving average. 50 might cross below 200. So at the same time, we are at support. It does look like the market is respecting support at 24.57. So I thought about going long here, but there are some sell signs, or there's some mixed trend signs. So I just decided to pass overall. So I didn't put an order on that one. Let's go to gold. Okay. Gold closed at 1291. So, a couple days ago we had the evening star pattern, evening star-ish pattern. This small candle and a big one down. Left candle here was a little up. But anyway, we're still respecting support at 1280, which I think is critical, very critical. So long as that occurs, I think we still have a bullish scenario going on. So that's the long-term outlook on gold. Now let's go to my trades, and actually a fair amount of activity in the past 24 hours in my trading account. Just one second. I'll pull up my trading account here. Okay, so the big thing is I have 5 positions on, and I had nothing got filled overnight. However, one of them, or two of them, one was already at break even, and 2 I just moved to break even. We'll get to those in a second. So that really cleared up a lot of risk, and I put on some other orders as a result. For me, as I mentioned before, moving to break even is a big part of de-risking the trade. Is something I'm very interested in. Canada Swiss. So I've been in this trade for a while. Finally got to de-risk it. I've been in here since mid-April, so almost a month of just it's been a range, hanging out here. And then finally, yesterday's candle, big move up, closed above resistance, this orange line here. That's what enabled me to move my stop to break even. Okay, so now my stop is, so if the market comes back down and hits my stop right here, I won't lose any money. Of course, I won't gain any money, but I won't lose any money. The trade has been de-risked. Now that I've essentially de-risked the trade, I'm not going to lose any money on this. I mean, that frees me up to deploy trades on other opportunities. As a reminder, my approach is I don't want to lose, if all my stops get hit, I don't want to lose more than 1% of my account balance. So it's pretty risk averse. Really, I like to really keep the drawdowns low. That allows me to trade with a larger amount of capital, knowing that it's really tightly managed. Of course, it does. The ideal scenario is, you have really low drawdowns and you have high gains. That's the best form of trading, which I'm still working on. Of course, some traders can compromise that, and you can take more risk, and on the upside get more return. So I could, in theory, turn up the risk. Maybe risk 2%. A lot of people do that, but I like to keep it at 1%. Just keep risk really low. Euro yen, and of course I shoot for high reward risk. So even though I'm risking 1%, that means I should be able to get 3 or more % gains. Euro, okay, this position did get filled. It's now this position has been gotten filled a while ago, and you see it ran. It never got a chance to close above this orange line, this resistance. It peeked through it a couple times. However, now it's come back down. It is now. Let's zoom in a little bit. It becomes easier to see. Okay. Yeah. So you can see now we're below where I entered. My stop is at right here, 39.42. So it's not super close to my stop, although it is negative. So that's a little disappointing. We'll see. I did add a long dollar yen position recently, a couple days ago. If you've seen the videos from a couple days ago, you'll see that got filled. That's slightly in the money, so at least they're balancing out. Okay, so Canada Swiss moved to break even. Euro yen not yet at break even. Pound Aussie. Okay, now this was another one. You see here, we closed at this this orange line. So at or below, I'll generally move my stop to break even. And this was part of, I had some short Australian dollar trades on. I took profit on that, and now because I think the Australian dollar is bullish, which would mean pound also would decline. The big signal here is, we were at a Fibonacci retracement level. We were at a 50 simple moving average. We had this nice reversal candlestick. Anytime you see those three signs, I'm inclined to take it. So far, so good on pound Aussie. Pound yen is the other trade I have on. And this is the same condition we've seen for a while. So, my stops, this trade is already at de-risk. I took half off here. So I'm holding out for a big gain on yen trades, and generally want to have, I'll de-risk, after I de-risk the trade, I want to have some part of it that I'm holding on for thousands of pips because I think the yen can do that. I talk a lot about that. InformedTrades.com/Japan. I mention that routinely. Check that out for the fundamental argument. When I see a long-term fundamental trend like that, I will try to use the technicals to safely manage the largest position I can to get a piece of that. Pound yen now, dollar Swiss. Okay, this order I just placed. This is a new order and it just got filled. So basically what happened here, we have a clear downtrend. We just rallied to the 50 simple moving average, also a trend line right here, and a horizontal support going back to December right here. So we have Fibonacci retracement. Oh, actually, the Fib line should probably go here. Okay, so we're in the vicinity, very close to Fibonacci retracement, horizontal support. We just broke above the 50 simple moving average. We're clearly in a downtrend. We have this trend line here. A bunch of signs, here. Now, the one thing we don't have is candlesticks, at least not on the daily chart. But, with this pattern, and something I've seen, when you have a lot of signs like this, sometimes if you wait for the candlestick on the daily, you'll miss the move altogether. So maybe I'm jumping the gun here, and maybe I'll pay the price for it. But I'm looking at the 4 hours. So here on the 1 hour, this isn't the best signal because it's a 1 hour chart. But we did see long wicks. So at least there's some bears stepping in. Now whether there's enough to reverse the trend, we'll find out. But I am short dollar Swiss. That order just got filled. And it's something I decided to put on because I de-risk a lot of my trades, or I de-risk 2 trades. So had room for another one definitely. And dollar yen, last trade. Okay, so and you see this trade is de-risked, slightly in the money. I entered here, this support level going back a while, and this is something, I moved my stop to break even. I had entered this before, and then I moved my stop to break even here, and then it came back down. It took me out. I didn't lose any money, but I'm basically re-entering the same trade that I put on. When was it? Somewhere around here or so. Maybe it was, yeah, probably here, April 10th or so. Right around there, I got filled. Then I moved my stop to break even right around here. Then I hit my stop. Then I just re-entered. So I still think this pattern is valid. We'll see. But that's about it for my trades on at the moment. So far, I now have 6 trades on at the moment, and 1, 2, 3 of them have been de-risked. So I have risk exposure on 3 trades, which means if all my stops got hit, my account balance would fall 0.75%. So I still have room for 1 more trade if an opportunity presents itself. That's about it for this week and my trades. Hope to see you all next week. Have a good weekend, and best of luck in your trading. Take care. We'll see you on Monday.